morning, everybody. Good morning from the City of London. A very warm welcome to this Bloomberg In Conversation event, this webinar. I'm very pleased to say that we're going to be joined this morning by Anneliese Dodds, the Shadow Chancellor here in the UK. So much uncertainty hangs over the global economy. The UK, of course, has a big role to play in that. Uncertainty over the UK economy, living as we do with this pandemic. Uncertainty around Brexit, still very much a theme to discuss as well. We look forward then, with those themes in mind, to hearing from the Shadow Chancellor about the relationship she wants to strike with the financial services industry and with the business community at large. We'll give the stage over to Anneliese to talk for 10 minutes or so to give us her opening remarks, and then we'll jump into a bit of a Q&A for half an hour or so. I've got a lot of questions. Some of them have come from the audience ahead of time and some of my own, but if you would like to still get involved in the Q&A session, then do feel free to use the Q&A section on the webinar functionality to put those questions to me, and I'll put them to Anneliese Dodds. Anneliese, if I could invite you to the digital stage.
Well, thank you very much indeed, Anna, and thanks so much to everyone who's joined us this morning. I'm really looking forward to the conversation. And of course, as you said, Anna, this does come at a very important time for the UK economy, a critical time. We've been through an extraordinary year, of course, and it hasn't yet ended. As it's drawing to a close, and with the prospect of a vaccine on the horizon, thoughts are turning, of course, to recovery and how we can build a better, more secure future for the United Kingdom. That's going to require contributions from everyone, public, private, mutual and voluntary sectors. In particular, it will require the support of the finance industry, where, of course, the UK is a global leader. But it also needs to start with an honest appraisal of where our weaknesses lay, which have been so ruthlessly laid bare during this crisis. The UK entered the pandemic with worryingly low levels of household financial resilience after a decade that saw insecure work rise and wages flatline. A quarter of all UK families had less than £100 in the bank when this crisis began. Since March, 4.5 million people have accumulated over £6 billion in debt and arrears. We also entered this pandemic as one of the most unequal countries in Europe. That too has accelerated. As more and more economic activity was locked down, people on higher incomes who could work from home put money away. Their savings have risen, of course, but those on the lowest incomes have been on average £170 a month worse off, losing 14% of their pre-crisis income. And we entered this pandemic after a decade of too many examples of poor corporate practice. High-profile collapses like BHS and Carillion indicated severe shortcomings in governance. During the pandemic, most businesses have made Herculean efforts to support their staff and often their local community as well. But coronavirus has also shone a spotlight on problems. Boohoo's supply chain, the gaping hole in Arcadia's pension scheme, the fire and rehire approach taken at companies from British Airways to Pret-a-Manger. When we emerge from this crisis, we must deal with these challenges of financial resilience, inequality, and poor corporate practice. We all want life to return to normal, but that can't mean a return to business as usual. We should never again let our country or our economy be so vulnerable to external shocks, because we count the cost of that in lost jobs and businesses gone to the wall. Financial services have an essential role to play in the recovery and laying the foundations for a better, more secure future. In fact, the recovery can't happen without financial services. That's one of many reasons why I'm so pleased to be with you this morning. A well-functioning, responsible banking sector can help people save and build their financial resilience. Pension funds can take the money workers set aside for tomorrow and put it to work backing the businesses of today. As the stewards of our largest businesses, asset managers can raise the standard of corporate behaviour, and insurance companies can direct the money we all put by in case the worst happens and make sure it builds a better, greener future. Those aims hark back to the origins of the financial sector, a sector that saw its role as helping build social fabric, encouraging savings and resilience. Often, those origins lay in Scotland. It was the Scottish minister, of course, Henry Duncan, who's credited with founding the world's first commercial savings bank. Although I have to say, there was such a bank established by a female social entrepreneur in Tottenham, but she wasn't quite such a good publicist. It was two other Scottish churchmen, Robert Wallace and Alexander Webster, who founded the first funded pension, the Widows' Pension Fund, to look after the wives and children of their fellow clergymen. The link between finance and social reform threads its way through the friendly societies of the 19th century to the origins of trade unionism and indeed of the Labour Party. And the purpose of financial services, helping people to save, to transact, to share risk, to fund responsible business, is especially important to me personally. My father was an accountant who ran his own small business. I saw firsthand how committed he was to enabling his clients to do the right thing, grow their businesses and support the local economy. Yet some firms have strayed a long way from this approach. When the finance sector stops thinking of itself as providing a means to empower individuals or businesses, but instead as an end in itself, it loses its way. And for a country like the UK with such a large and powerful financial services industry, it's a huge lost opportunity and the results can be catastrophic. By 2008, the finance sector had lost its way. But in 2020, we've often seen the sector at its best, setting up huge new systems overnight to get government-backed loans out to businesses who were desperately short of cash, helping those who ran into difficulty to keep a roof over their head, partnering with charities to support those most in need. We must harness that sense of active commitment as we plan for the recovery, a recovery which must be environmentally productive, not destructive, and one marked by providing additional opportunity, not wasting it. Many in financial services are already blazing a trail here in many ways, with the amount raised in green bonds on the London Stock Exchange having nearly tripled in the last 3 years. But we know too, there is much more to do. The UK is only just over a third of the way to achieving the targets we need to reach net zero, and we will not get there without the power of the finance sector to mobilise capital and put it to sustainable use. We need to go further, faster. That's why Labour's called for it to be mandatory for all listed companies to report in line with the recommendations of the Task Force on Climate-Related Disclosures next year, when the UK hosts the COP26 conference. And it's why we sought to amend the Pension Schemes Bill, working hand in hand with pensions providers, so that pension schemes become aligned with the Paris Agreement. Sadly, the government's ambition in this area still falls far short of what's needed. Ahead of last week's spending review, we called on government to bring forward £30 billion of green investment in the next 18 months, supporting the creation of 400,000 jobs. That in turn could stimulate more private capital. Unbelievably, when it came to it, the Chancellor actually cut £300 million of capital spending next year compared with previous plans. The second area where responsible finance has a critical role to play is in extending opportunity to every part of our country. We know, of course, that the UK's financial services sector is more than just the City of London, with 2/3 of the sector's 2.3 million jobs being outside the capital. But it's telling that people continually use that shorthand. This is symptomatic of a broader sense in which our economy is out of kilter. Holding all else equal, people living in the north of England have been more likely to be made redundant during this crisis. And of course, many are now, along with people in the Midlands, much more likely to be living under the highest additional COVID-related restrictions. Instead of accepting that regional inequality, we need to make every single part of our country the best place in the world to grow up in and to grow old in. For that to happen, we need opportunities on people's doorsteps, not at the other end of the country. That means businesses in every town that people want to work for and that they can envisage their children working for. And every part of the country must feel like a good place to set up home. That needs decent and affordable, energy-efficient homes. We can't achieve any of that without the finance sector. To deliver on those aims, a greener economy with opportunities right across the country needs policymakers to work hand in hand with the finance sector, because responsible financial services firms deserve a responsible government in return. Too often, in recent years, we've seen the opposite. A sector which accounts for 10% of our economic output has been almost totally left out of the government's trade negotiations with the EU. What started as plans for an ambitious financial services chapter in a free trade agreement with talk of mutual recognition and super equivalence has been watered down and watered down. Now the Conservative government is desperately trying to dress up a sow's ear as a silk purse. Their unilateral decision to grant access to UK markets with the hope, not guarantee, that we might get offered the same in return. It's not a foregone conclusion that we'll emerge with a deal, as last weekend's revelations indicated. If we do obtain a deal, media reports suggest it will be as thin as gruel. It won't contain anything for our largest exporting industry. And along the way, having threatened to break international law as a negotiating tactic, the government has trashed our reputation with other potential trading partners. No wonder we've already seen 7,000 financial services jobs lost and 1.2 trillion in assets poised to follow. Sadly, what's true of Brexit has been true of the coronavirus response often as well. Last-minute changes to economic support schemes have left businesses in all sectors not knowing what on earth is about to happen next. The Chancellor set out 4 versions of his winter economy plan in just 6 weeks, all of them before winter had even begun. We've come out of national lockdown today, and yet the business support package for Tier 3 is still inadequate, and we still lack clarity about what comes next. And we've still had nothing from the government on what will happen to those companies who've taken out loans and find themselves burdened with unsustainable debt, despite the finance sector's best efforts to draw attention to this issue. There's still no word on the mysterious Project Birch plan to support our most strategic industries. And above all, there's still no proper plan to see our country through to March. That's completely irresponsible in a situation where the UK is experiencing the worst economic downturn in the G7, and where the OECD forecast yesterday that our recovery will take longer than the rest of the G7 too. It doesn't have to be like this. Politicians and financial firms should be working hand in hand to lay the groundwork for our recovery. I want us to have a genuine partnership so that together we can deliver security and opportunity for every part of our country. Thank you.
Anneliese, thank you very much. Thank you for those opening remarks. Certainly it has given me a lot to think about. Ties in nicely with some of the questions that I received ahead of this event as well. So we'll try and get through some of those themes. You talked a lot about the relationship with financial services, which we'll get into, and indeed with the business community more broadly. Let me start with the relationship with business. You talked about poor corporate practice, and you listed off some areas where we've seen poor corporate practice. We all see those stories splashed across the news. And in the past, certainly in the more recent past, they've resulted in a pretty knee-jerk attack on business from the Labour Party. Has there been a change in terms of your knee-jerk reaction to business that means that you won't take those examples of malpractice in the business community and then apply them to the whole of business?
Well, Anna, I don't take a knee-jerk reaction to anything. I want to see the facts and I want to see the evidence and make sure that policies are then created which respond to circumstances. And actually, I've been very keen during this crisis to make sure that the role of the private sector has been very, very salient, that politicians have been talking about it. You know, I've done a very large number of visits, not all of them in person, often virtual ones because of the circumstances we're in, really to highlight that role of the private sector, of business, because, you know, as I said in my speech, up and down the country, what we've seen is companies really rising to that challenge, working incredibly hard to protect their staff, but very often working very hard to protect their communities as well. We've seen that enormous effort to provide ventilators, for example, incredible technological innovation that's really compressed into weeks, even days, what would normally have taken months. So that has been my approach, and indeed that's been the approach of the Labour Party, because it's what we've seen happening in our communities in front of our eyes.
And what is your day-to-day relationship with business? Through what filter do you take soundings from business? Because in the past, I remember there was a famous interview with Ed Balls where he couldn't remember the name of a business supporter of the Labour Party, and there was a sense that John McDonnell told me he was having tea and biscuits with Goldman Sachs. I don't know if you're still doing that, but talk to me about how you take soundings from business.
Yes, I mean, I think unfortunately we're not really able to have tea and biscuits with very many others in person, are we, at the moment, because of these circumstances. I mean, certainly as mentioned, I've had a number of different visits to different businesses. I very regularly talk to different business people, but also, of course, with the peak associations for different sectors of business, different types of business, always making sure, of course, that smaller enterprises aren't left out of the conversation. It's very important to me. Obviously, I come from a small business background in terms of my family, but also, of course, making sure those conversations include other stakeholders as well. And what I think we've seen during this crisis in the UK is that actually when business has worked with trade unions and when government has listened to both, we've seen very, very effective systems being put in place to support people. And that's when the response, I think, has been effective, when it's been an inclusive one. And certainly that's what I've tried to model from the opposition's perspective as well.
In rebuilding the relationship with business, though, what will be the test of that? What will be the end goal? Will it be a letter from FTSE 100 CEOs to Keir Starmer giving him support in a few years' time ahead of an election, or will it be something different?
I mean, to me, this is about much, much more than any kind of narrow partisan consideration. I mean, actually, I've been talking to businesses up and down this country who are deeply worried about the future. You know, business owners who've had to take incredibly invidious choices, people who might have devoted their whole adult life actually to a particular business, and where they're having to take awful choices about whether they can keep staff on or let them go, whether they can even continue. To me, the test is going to be whether Labour's been an advocate for those businesses, making sure that we protect that economic capacity, that we keep businesses going. That, to me, is far more important than any partisan consideration. But I think in order for people to really feel that Labour is speaking up for them, we need to have that dialogue. And certainly I want to ensure that people who are in business feel that the Labour Party is a home for them. In fact, last night I was speaking at what's normally the kind of Christmas dinner for Labour business. We've got a Labour business group within the Labour Party. Obviously it couldn't be a dinner, it was all done over Zoom. But certainly there we've got a very large number of business members within the Labour Party. I want everybody in business to feel that the Labour Party could be a home for them.
Yeah, I like the idea of these festive dinners where you all bring your own dinner. That could sometimes work. Does it sound then to me like you want to reduce the flexibility of the UK labour market? Would that be an aim?
Well, I mean, I should say, first of all, around the Christmas dinners, I actually ended up taking a Lemsip with me to that one, so it wasn't quite as festive as it could have been, as you're probably hearing from my voice at the moment, Anna. I mean, in terms of the UK labour market, I mean, I think we've seen, as I was just talking about, we've seen many employers really doing all that they can to help their staff during this period. We've also seen a situation where, for example, we've seen a proliferation of app-based work. Now, in many cases, that is exactly what people are looking for, but actually some of the survey evidence suggests that people working through those kinds of mechanisms, up to 3/4 of them feeling that they're unsafe when they're at work from a health and safety point of view. Clearly, we can't continue with that kind of a situation. I think we've seen laid in front of us in pretty horrible terms how particular kinds of work in different parts of the UK, how they've been linked to unsafe practices. And I have to say, from my discussions with business, there's a very, very strong desire to make sure that we deal with those problems. We're talking about a minority of business. But the overwhelming business view is that we need to improve that situation, that's something that would actually be very good for UK PLC as a whole.
We've had a few questions around the way that the government has managed the crisis, so I'll get on to that. Have you been surprised by the way that the government has handled the crisis, and does it leave you little room to differentiate what you would do, given the generosity of support that we have seen from the UK government?
Well, the core question isn't whether the support is generous and the overall amount that central government has spent on this response. It's whether it's been effective, whether it's been targeted in a direction that's protected lives and livelihoods. And I have to say, unfortunately, what the Conservative government has done has not met that test. It hasn't met that test in relation to public health, very, very sadly. And obviously the indicators there speak for themselves, unfortunately. We've seen billions being spent on, for example, the test, trace and isolate system, and it is still not working effectively. That's incredibly frustrating. We've also then seen, when it comes to economic support, that the quite often very last minute approach of the government, approach which often hasn't been sufficiently targeted, that's led to unnecessary job losses. So, for example, the fact it took so long for the Chancellor to appreciate that it would be necessary to announce wage support, and of course the fact that he blocked a circuit breaker as well, which could have been a much shorter way of getting a grip on this disease rather than lockdown that we were forced into. The fact that happened did end up costing jobs. It ended up hurting our economy. So no, I don't agree with the way that the government has approached this, unfortunately. I mean, we want them to do the right thing. We want to be a constructive opposition, but I would say they have made mistakes in their response.
And we had a question, and this is linked to the pandemic but goes broader. One viewer asking about universal basic income and whether this is going to be part of the solution to simplifying welfare and to increase the resilience of the UK economy in the future. Is that something that you're thinking about?
Well, I think, Anna, there's a big question around what UBI actually means, because I think it means very, very different things to different people. Some would say that UBI boils down to, for example, having fewer sanctions applied in the social security system, to, for example, switching the initial loan in the universal credit system into a grant. Now, that would really make sense because, to have people waiting for 5 weeks before they can receive any support through social security, which is the current situation in the UK, just simply doesn't make sense. On the other hand, though, you've got some who advocate for a UBI where they say all you would have to do is just take the whole social security budget, divide that up amongst everyone. That simply won't work because, of course, some people have got far more extensive needs than others, and they shouldn't be missing out from support because of that approach. So I think it really does depend on what people actually mean by that term. There's obviously quite a lot of baggage associated with it that we need to cut through.
Okay, so more work on defining it first, perhaps. Leading on from the handling of the crisis, of course, this will leave this country with a big debt burden. And I wonder when you think it is important to start repaying that debt burden and when it's important to start having conversations about repaying that debt burden.
Well, I really don't think that now is the time to be having those conversations, and nor do many other commentators. So we saw, for example, a couple of weekends ago, the IFS making this point quite forcefully, that actually some of the discussions around taxation changes that have taken place recently from within government, quite a lot of shadow boxing over the summer around whether tax changes were about to be made, that those were not helpful. And of course, the UK right now is unfortunately in a very precarious economic position. I mean, as I mentioned in my speech just yesterday, the OECD suggesting we would be likely to see the slowest recovery in all of the G7. So we do need to be focused right now on trying to recover jobs, trying to rebuild businesses, trying to keep people in work, keep businesses going. Eventually, obviously dependent on what happens with the interest rate, there will be those discussions, of course, around taxation, and Labour will look very carefully at whatever the government puts forward, and obviously we'll draw up our plans for the next general election very carefully as well, in conversation with a range of stakeholders. But the time for that, I think, is some way off right now. We really do need to be stemming that tide of unemployment and business failures that we're seeing right now.
I'll linger on this just for a moment because we had a couple of questions on it. I mean, conceptually, does it matter that borrowing is so high? For the Labour Party's perspective, is it a problem?
Well, conceptually, I suppose it depends what the word conceptually means, doesn't it? I mean, it of course would be a problem if our creditors started wanting to, play harder ball if we're in a situation where there were those higher interest rates. I mean, it doesn't look likely currently. Most of that debt is on a very, very long-term basis. I'm somebody who, over the longer term, thinks that it is sensible where we can try to ensure that, through sensible investment, that we get to a situation where we have less consumption spend. There's long-running issues for the UK economy about the lack of affordable housing, for example, then showing up in our social security spend through housing benefit. I wouldn't want us to be in a situation where over the long term we've got an imbalance between that and the revenue that's coming in. But that's really not what the conversation is about right now. We can talk about, in particular, I often put it in these terms, we can talk about how we would, for example, tax the tax base, but the critical question right now is actually trying to preserve that tax base. It's trying to keep those people in work, trying to keep those businesses going.
And I guess it might be, with that said, it might be a little too early for this question, but somebody has asked it, so I'll put it to you. At the UK's corporation tax rate, where it stands at the moment, how much higher could it go? And do US moves to move it a little higher, do they provide cover for the UK to do something similar? Would that be something you would consider as part of taxing the tax base?
Well, actually, the current Conservative government, of course, has cancelled its initial plans to reduce corporation tax. So they made that clear at the time of the last spending review, and of course previously as well, their assumption that they wouldn't be going ahead with that cut. As I mentioned before, for the next general election, we would be working very closely with our stakeholders around what our tax plans would be. I would say, though, when I talk to businesses up and down the country, the tax issue that they tend to focus on very often is not corporation tax, it's actually our business rates regime. Which has become increasingly anomalous, which arguably some would say disincentivizes particular forms of investment. We've been promised a thorough review of that system. It's not clear to me that the review is anything like thorough enough and deep enough to really deal with the problems with that tax, which, as I said, is the kind of key tax issue that businesses mention to me when I meet with them.
And that takes me on nicely to some questions around the economy, not least of which retail. Clearly, the business rate story is part of that. Do you think what more should be done or should any more be done to support the businesses that have failed in the retail space? I'm thinking in particular of the large businesses, Debenhams and Arcadia. And what should be done to help the people who have lost their jobs as a result?
Well, I mean, that's an enormous question. I mean, first of all, I think obviously there has been that long-term trend of people increasingly shopping over the internet. But of course, that's then compounded by what's been going on with the public health situation, and not uniquely down, of course, to the presence of those restrictions. Actually, we know from the IMF and others that there's been a huge behavioural impact with people's confidence being reduced, and that's been a special problem in the UK with people's lack of confidence in the public health response. So I would say the first thing that needs to be done to protect retail is to get far more of a grip on that public health response. I think that's absolutely essential. We need to remove those factors that are continuing uncertainty for the sector. The fact that we still have the spectre of potentially a change to the employer contribution to furlough in January. I think that is a dreadful idea right now. The Chancellor should just be saying right now he's not going to change the employer contribution, because sadly it looks like we won't be out of the public health crisis in January at all, unfortunately. But then I would say for those people who've already been so badly impacted by this, who've already been made unemployed, much more does need to be done. We've actually already seen, of course, that Kickstart scheme being announced by government, then the Restart scheme, but the amount of funding for Kickstart being reduced, apparently because the number of people making use of that scheme is much less than expected. And we've been kind of ringing the alarm bell for some time, saying, why isn't government doing more to make sure that scheme is effective? It's not necessarily learning the lessons from previously effective employment support packages in the past. we also don't have the kind of focus on retraining that is present in many other countries. The adult learning package announced by the Conservative government, most of that isn't going to come into play until well into next year. By that point, many people will have been unemployed for a whole year. So we need much more action to support people in that situation.
When we face structural change, so I'm thinking of old industry in the 1980s and now retail perhaps in the 2020s, we face this structural change. What role should government play in supporting communities through that kind of structural change? You've referenced training. How substantial a rethink do we need to have around that?
Well, I think we do need to have more of a rethink within the UK. I would really contrast some of what's happened in our country with other nations. If you look at what's occurring, for example, in aviation and aerospace, the UK government, in my view, has taken a relatively hands-off approach. It hasn't had those intensive discussions with the industry, with trade unions that have occurred in many other countries. We haven't seen, for example, the commitment to the kind of conditional investment support that has been pledged in other nations. And unfortunately, we've seen that impact then in the number of jobs being lost. I mean, you look at what's happened with Airbus, very sadly, for example, where there's been a view that the UK commitment has been lesser compared with that in France and Germany. So there does need to be commitment from government, not an unconditional commitment, but a commitment which works with industry, with other stakeholders, to look through the different scenarios facing different industries, to plan with them and try and ensure that when there is change, and there will be change, and of course not just through this crisis, but because of the climate crisis as well, that when there is that change, it's planned change and not destructive change.
We had a question through on a totally different subject around the generational divide in the UK economy. Somebody saying they're a relatively young person and they can't help but feel that the generation above has become wealthy at his or her generation's expense and in an unsustainable way. What are your thoughts on that generational inequality?
Well, of course, we see young people particularly hard hit by the current crisis. They're much more likely to have been working in sectors like hospitality and tourism, which have been particularly hard hit by unemployment. It has been a very, very difficult time for many of them. And of course, that's on top of existing inequalities, particularly when it comes to access to housing. I would say, however, that we have tremendous inequalities in the UK across our older cohort as well. We're now entering a situation, for example, in some of our major cities like London, where I'm speaking to you from now, where actually many of our older people are not in secure housing. And that's really quite unusual compared to the last few decades. Normally we would be in a situation where older people would either be owner-occupiers or they would be in secure council accommodation, social housing. We've actually got very, very large numbers of older people now who are retiring, but retiring into the private rented sector with a lack of security there and often without the income from a decent pension in order to be able to pay for their costs there. So I think we've got to be aware of those kind of inter-cohort inequalities across the group of older people, as well as maybe some of those intergenerational issues as well.
Okay, we're getting a few questions on infrastructure spending, so I'll just come to that briefly. One person watching is asking, you've said that the spending review and national infrastructure strategy don't go far enough in setting the UK on a credible path to meet net zero. What would you and the wider Shadow Treasury team like to see from the energy industry, who will be a key sector decarbonising the whole of the UK economy? What would you like to see from the energy sector?
Well, I think we've seen some incredible innovation actually in the UK. I mean, I represent half of Oxford, and we've had 2 pilot projects occurring in my city around decarbonisation, around the kind of smart energy that we need to see for the future. So I think there's enormous potential there, but it's just not occurring quickly enough. And over the summer period, myself and Ed Miliband, who's the Shadow Business Secretary, we conducted a consultation with business, with trade unions, other stakeholders, Labour Party members, really getting their views about how we could ensure we had a green, sustainable economic recovery. Almost 2,000 people responded to that. The report is available online if anyone has the chance to look at it. And we did set out out of that consultation, the ideas that came from it, a programme of £30 billion of brought forward capital spend over the next 18 months, looking at a whole range of different factors, actually particularly focused on energy efficiency, where I think the energy sector has done a lot with its customers, but where we really need to see that governmental backing now to get retrofitting spread across the country at scale in the way that it needs to be, of course, creating jobs up and down the country in doing so. So if people want more detail around that, please do have a look at that report and do let us know your thoughts on it.
Okay, a couple of questions around key uncertainties that still exist for the UK economy. Brexit is obviously one of those. You referenced Brexit in your opening remarks. Anneliese, what is Labour's approach going to be when it comes to the need for approving the Brexit deal that Boris Johnson perhaps will bring back, the post-Brexit trade deal I referenced? Does he really have a blank cheque that the Labour Party will approve any deal, no matter what it looks like?
Well, of course, Anna, we haven't seen that deal, and we're just 29 days away from the end of the transition period. And as I said in my speech, we heard some really worrying rumours over last weekend, which seemed to indicate a lack of political grip, unfortunately, on those negotiations. Obviously, right through this process, we've been really pushing governments to do all they can to deliver what they promised, which was, of course, a deal that would, in their words, protect jobs. Now, we really need to see them coming forward with that. We don't know when they will be providing that deal. We all hope that they will. And of course, when we are provided with it, we will look very, very carefully at it and determine our voting position on the basis of the details of that deal. I think it's clear that it's not the deal that many of us had hoped for. But above all, of course, we need to make sure that we prevent no deal at this late stage with just 29 days left to go of the transition period.
Another uncertainty that might loom larger, I suppose, on the national, maybe even international agenda once Brexit is dealt with in some fashion is Scottish independence. And I thought that I might ask you about this because some in the business community might be interested in volatility that could happen around events in next May. You cited quite a lot of prominent Scots in your introduction. I wonder if the SNP wins a majority in the spring in the Scottish Parliament and they're standing on a clear platform of pushing for another independence vote, should the UK government grant that independence vote?
Well, look, I'm not going to talk about hypotheticals, and some may call me an optimist, but I really want Scottish Labour to be playing a very, very strong, even stronger part in that Scottish Parliament. And I'm not going to try and prejudge the results of that election. I think it's incredibly important. I say that as someone who, admittedly, my accent's changed a bit over the years, but someone who does have a Scottish heritage. I really keenly feel that we do achieve more when we are together. And I found in recent years, and particularly recent months, very frustrating indeed. There's always what I call a Barney. There's a Barney between the Conservatives in London, the SNP in Holyrood, and the people of Scotland are just missed out and they lose out because there's constantly a blame game rather than actually achieving for the people of Scotland, and particularly economically right now, with unemployment hitting Scotland harder than any other part of the UK. We need to see politicians focused on the people, on their concerns, on the needs of the economy, rather than on constitutional questions.
Has devolution been a disaster, to quote somebody?
I think that was a very peculiar remark that came from the Prime Minister. But I would say, I do think actually that we need to see devolution really, in principle, going further. I mean, we've seen a situation in Scotland, as indeed in England, where there's been an enormous centralisation of power that's taken place. Actually, the resources available to local authorities in Scotland have gone down very substantially. I don't want to see that continue. I want to see local areas being given more control, more power, and the resources that are necessary, particularly to drive that economic development. I was talking to a number of people, business people and others, Labour members over the weekend in the Highlands and Islands. That's an area the size of Belgium, but with a very, very small population, 200,000 people living there. enormous potential, but no coherent industrial strategy, unfortunately, over the last 10 years. Now, that's just not good enough when we've got that incredible potential. We need to be making sure those areas can really achieve their full potential and create those jobs of the future.
And as we draw towards the close of our conversation, Anneliese, I just wanted to take a step back and think about where the party heads from here, the big messages you want to leave us with, I suppose, and the way it's changed maybe since the previous management. Let me ask you what you take away from Joe Biden's victory in the United States. What does UK Labour learn from the way that President-elect Biden has come to power?
Well, that's a really interesting question, Anna. And for most people that I talk to, it tends to be boiling down to, well, that's why I was right all along. It tends to be what they draw from the results. I suppose from my point of view, I have to say that it really was a sense of relief, that result, particularly around the prospects for the COP summit next year. And of course, we've known since Stern that the biggest threat to our economic future is that from the climate crisis. So an enormous sense of relief from that. I think from my point of view, although again, take this with a pinch of salt, it always tends to depend on people's political proclivities from the beginning, what they say about the lessons from the Biden result. But from my point of view, I think it shows that it is possible to have that message of hope, of unity, of rising beyond division, bringing people together. And certainly that's what Labour obviously has been trying to do throughout this crisis and will continue to try and do.
Does it mean you win from the middle, not the left?
I think it means that you listen to people, you listen to what their concerns are, and you act on them. It's my understanding that there was a very thorough listening exercise that went on as part of the Biden campaign, really trying to understand where people were coming from right across the country. And, you know, that's what we've been doing as a Labour Party, really trying to get out there, talk to different communities, understand their concerns, and really learn what we should be putting forward within Parliament and elsewhere and in our local councils. So I think it's that listening that's so critical at this stage.
And just finally, one question that somebody sent in ahead of our conversation, which I thought was a nice one to leave it on. How, as Chancellor, would you plan to, or if at all, plan to move the country away from the current economic model, striving for growth, towards what the questioner puts as impactful outcomes for UK citizens, such as happiness and sustainability? What is the balance for you as potentially a future Chancellor, Anneliese, between growth and the other ways that you measure the success and contentedness, sustainability of an economy?
Well, actually, I think the evidence shows that it's not possible to have a strong economy in the medium to long term without having a sustainable economy, as we were just talking about. You can't choose one or the other. I think we've also seen the impact of having some of those very, very clear labour market inequalities in the response to this crisis. You know, the fact that, as I mentioned in my speech, a quarter of UK families didn't have even £100 in the bank. That's obviously very bad for them individually. It's also something that's very bad for society. It obviously reduces our ability then to bounce back because people's spending power is so low, because that confidence is so low. So I think we need to look at all of them in tandem, actually. I have to say, I've sometimes been rather sceptical around some suggestions that, you know, rather than, for example, measuring relative poverty, which of course has got substantially worse over recent years, that we should move to other measures. I do think there is validity in looking at the resources people have available to them. I do think that's important. But of course, we need to be looking at other values as well around well-being and sustainability. We need to do all of them at the same time.
Okay, Anneliese, thank you very much for joining me today. Thanks very much for joining our viewers here at Bloomberg in conversation with Anneliese Dodds, the UK's Shadow Chancellor.